Good morning, everybody. Good morning, and happy Monday. Welcome, yes, welcome to another live here with Asia Nasir, your favorite nonprofit strategist, here with another live for nonprofit organizations, whether you're existing, whether you're just, newly founded, or if you're thinking about starting a nonprofit organizations, my lives are here for you each and every Monday, talking about a topic that is extremely important to sustainability for your nonprofit organization. So for some of you that are new to my channel, as I mentioned before, my name is Asia Nasir, and I am the founder and nonprofit strategist of my consulting firm, Utopian Enterprise Business Solutions, where our mantra is to help you first learn, then help you earn. So that is what we do here, helping you, fulfill your missions in real time. So once again, we're talking about a topic that is really relevant to nonprofit organizations at this time, specifically first quarter, new year, January, February, and that is file or fail, the hidden risk of skipping your nonprofit annual filings. So a lot of, nonprofit organizations, especially startups, grassroots, they do everything they need to do to get their nonprofit organization up and running. They register with the state, and they also get their 501c3 tax exempt status, the EIN. They get the whole nine. They do everything that's required to start. The problem is a lot of nonprofit organizations, because of lack of education and knowledge, they don't realize that they're not doing what they need to do in order to keep their nonprofit status, as well as, to be able to run as a nonprofit organization in their state. So today I'm going to be talking about the two different filings. A lot of people think that there's just one, when in actuality there are two filings potentially in for you, depending on which state you're in. And in most states, it is two filings that you have to do each and every year. So that is your federal filings, and the other is your state filings. So before I get into the risk of not doing these filings, I want to explain the difference between the two. Because again, this is all about educating and becoming knowledgeable and understanding the differences and the importance of each. So when a nonprofit organization or a founder decides that they want to start a nonprofit organization, they have to register with the state. They have to register with the state as a nonprofit corporation. And so that way they're able to actually run a nonprofit organization in the state that they're looking to serve. So with that being said, each state requires you to continue to do an annual filing, state filing, that lets them know that you're still in good standing. If there's any changes to your nonprofit organization, was there a change of address? Have there been changes to your Board of Education or whoever is the registered representative for your organization? Has that changed? So all of those different things are things that your state requires each and every year. And so depending on when you registered your business with the state, that's typically what they will want. That's when they're going to ask you to annually file. I know when we started our nonprofit organization, Jessica Cares, it actually was, in Jersey, and it's still headquartered in Jersey. So every year around August, we receive our state notification letting us know, hey, in August, you gotta file your state annual filings. And in most states, it's online. It's online. It's an annual fee. Depending on what state you're in, it ranges anywhere between $25 and $35 or so to register, not to register, to annually file, to recertify, to show that you're in good standing. This is extremely important because some grant funders will actually request that they get an updated, in good standing form. If you don't have that, unfortunately, you're not in compliance with what they need in order to provide you funding for your nonprofit organization. So it's extremely important that you do this every year. Now, I want you to just hold that for a second, because there's a little bit more to that. Then you have what's called your federal filings, your 990 tax returns. A lot of people feel, especially grassroots, that, even existing nonprofit organizations in existence like a year or two, they will, oh, we didn't make any money. We didn't make any money. We're still, trying to build. We didn't make anything. It doesn't matter. The IRS does not care if you made a penny or if you made a million. You have to file your 990 tax returns. And there are two different tax returns. There's one for nonprofit organizations. If you made less than 50,000, then there is only a certification, letting the IRS know our nonprofit organization made less than 50,000, and you are certifying that as the executive director or the owner, founder, I wouldn't say owner, founder of the nonprofit organization. You're certifying that, and that is a tax return. So they don't care if it was $49,999 or if it was a penny. You have to file that annual filing. And then if you made more than 50,000, you are required to complete an entire tax returns to show what income you received for your nonprofit, whether it's through donations, earned income, fundraisers, grants. You have to list that and what your expenses was for the year if you made over 50,000. So that is your federal filings that you have to file. Now, with both of those, this is where it gets into what we're talking about right now, whether state or federal. Here is what the risk is if you do not file. If you skip doing this and you think, oh, it's not important, I'm not making any money or anything like that, here is the risk. And there are several. There are several. So it's really important that you know. And sometimes when you know that, hey, this is really gonna, there's some consequences to this. As simple as it may seem, you're going to place this on high priority for your nonprofit organization, as well as, for the board of directors. Everyone knows that this is extremely important. So the first risk that you run if you don't, and this is if you don't file state or federal for 3 consecutive years. 3 consecutive years. Please keep that in mind. 3 consecutive years. If you do not file that you are in good standing with the state in which you registered your nonprofit, or if you do not file a 990 tax return with the IRS for 3 years consecutively, this is the biggest risk that you run, and that is having your 501c3 tax exemption status revoked. Automatically revoked. No questions asked, revoked. The IRS does not know if you're actually running a nonprofit organization. They don't know if you're running a for-profit and you're just having it under a nonprofit so you can skip paying taxes. They don't know because you're not notifying them anything about your nonprofit. So after 3 years, the IRS says, hey, you're not letting us know what you're doing. We're going to revoke your tax exempt status. Same with the state. If you do not file that you are still in good standing and updating them as to your address or any changes, or just even letting them know everything's the same, just recertifying and we're still in good standing. If you do not do that for 3 years consecutively, they will automatically revoke your 501c3 tax exempt status. And they will revoke your ability to run a nonprofit in the state in which you're headquartered because you did not file your state. So you may have to, you're going to have to recertify and re-register with the state, as well as, unfortunately, it's not like, hey, you get to pick up the phone and say, IRS, hey, we're still a nonprofit, we still want to run. No, you have to reapply for your 501c3. And there are costs involved because now you have to pay for the application fee. And if you want to show that you are continuously having your 501c3 tax exemption status with no interruption, you have to pay now $600 just for the application fee with the IRS. $600 you have to pay to get your tax exempt status, hopefully reinstated with the IRS, because it's not a guarantee. Just like when you applied, it's not a guarantee. There is no guarantee, especially with the fact that now you're asking for reinstatement. Now you have to prove to the IRS how you're going to avoid this from happening in the future, and all of this in order for the IRS to say, okay, you can have your tax exemption status back. So that's a huge risk. And obviously, if you do not have your 501c3, you cannot apply for grants. You cannot apply for foundation money. Um, you know, there are a lot of things that you cannot obtain donations that are tax deductible. Eligible for tax deductibility. All of that goes away with losing your 501c3. So it's really important that you file your annual filings each and every year. No matter if you make no money or if you make some money, you have to file both state and federal. Otherwise, you run the risk of losing your tax exemption status. If worst case scenario this happens, the second risk that you run is damage to your reputation. Because although, just say the IRS decides, hey, we're going to reinstate your 501c3, guess what? When you apply for grants, when you apply for foundation money, when you ask for corporate donations and things like that, grant funders do their due diligence. Corporations that are really engaged with nonprofits and giving back to the community, they're going to do their due diligence to see what's your status. Hey, what is this organization about? Are they a well-oiled machine that's running their organization the way they're supposed to? Are they in compliance? Are they doing things based on federal and state regulation? So although you obtain your 501c3 tax exemption status again, say they reinstate it for you, it still shows, because it is public record, it will still show that at some point your tax exemption status was revoked. It does still show that, because it is public record that there was some time in you running your nonprofit, your tax exemption status was revoked. Now, this may be a conversation that you don't necessarily want to have when you're asking for money. That grant funder or that corporation may decide, what, this is not the organization we want to give money to. That could be the thing that can make or break you being able to receive funding in order to keep your programs and your services running. Or it's going to be an uncomfortable conversation where they're going to ask you, why was your your tax exemption status revoked? It's going to put pause, and it's a damage to your reputation that at some point you were not running things the way you were supposed to. And again, when you're asking for money, that is not a conversation that you want to have, nor is it something that you want a potential grant funder or, sponsor to see. You don't want them to see that. And trust me when I tell you, they do their due diligence, and it's right there on the IRS public record for nonprofit and charitable organizations. They want to see, are you filing your taxes every year? Have you been revoked? Are you currently revoked? All of those different things. So you may be asking for money and not realizing, hey, I haven't filed taxes in 3 years, and your tax exemption status may very well be revoked, and they'll be able to see that. And they do check that because they want to make sure that if they're giving money, this is to an organization that is in good standing and that their donation is tax deductible. Absolutely. So that is, it could damage your reputation as a nonprofit organization that is running it the way it's supposed to and worthy of funding. Right? Your organization has to be worthy of funding. And there's a lot of competition out there. So you don't want your nonprofit to have to run that risk of not getting money just because you didn't do something as simple as filing your annual filings with the state and, with the IRS. So that's the second, risk, that you run with, for not filing. The third is increased scrutiny with your nonprofit organization. Now eyes are on you with the IRS, especially. This is a nonprofit organization that was not in compliance. Guess what? Eyes are going to be on you now. Did you file your tax returns this year? You might even encounter an audit from the IRS. So you want to make sure that, let the IRS worry with people that's really not doing what they're supposed to be doing, and let you run your organization with no disruption, and things like that, because you're doing things the way you're supposed to be doing. They're like, this organization is on the up and up. They're doing what they're supposed to be doing. There's no, no eyes are on them. It's additional scrutiny on you. And it may even be scrutiny from your community. Your community finding out, hey, we wanted to give money and, oh, we can't. Your 501c3 tax exemption status has been revoked. Bad news always spreads faster than good news. So you don't want to have that happen where now there's eyes on you, there's scrutiny on you, where people are checking, especially with the IRS. Audits are not fun. Audits are not fun. They're combing everything with a fine-tooth comb. They're checking and seeing if you're dotting all your I's and crossing all your T's. You want to make sure, and if they find something and you've already had a revocation on your nonprofit, it's just a hassle, and it's taking you away from the mission. It's taking you away. It's taking away your board of directors. It's taking away from you being able to service the community, which was the whole reason why you started your nonprofit, is because you want to help. And when you're getting audited and when they're picking things and looking at things and questioning things, it is going to take you away from what it is that you want to do. So you want to avoid that. You want to avoid that increase, eyes on you, scrutiny on your nonprofit organization, especially if it's not necessary, right? So last, as I mentioned before, and that's the last, it just leads to the last one, it's a disruption to your operations. You're having to get paperwork. The secretary, has to be disrupted of your organization to be able to look at your meeting minutes, your treasurer, your financial records, all of these different things. It's a disruption because now you have to pay attention to that. And that has to be the priority, because if you're not in compliance and you're not providing, an auditor, what they need, they shut you down again. You know what I mean? So it's a disruption to your operation. And if your tax exemption status is revoked, now instead of promoting your programs and your services and helping people, guess what? Now you got to go back to the state, refile. Now you have to go back to the IRS and refile and hopefully obtain your tax exemption status. If there are those that are wanting to give money, you have to tell them to hold it, because your status is not worthy of possibly, offering that tax deductibility, which may be one of the reasons why they're giving, is because they know their company or that they personally are going to be able to receive a tax deduction. All of that halts because you didn't do something that should have been done every year. So how do you avoid this as a nonprofit organization? Well, what you can do is you can, create some type of compliance calendar, putting a reminder, whether it's in your, on your computer, if it's on your smartphone, or if it's just a big calendar. Like I have a big calendar. I'm still old school, and I put it on there. Annual filings in August. I know it's coming up, and every December, that's the end of the year. I know in January we are filing our tax return for Jessica Cares. That's what we do each and every year and have been doing so since 2010. So it's really important that you have some type of, calendar in place, a reminder in place, letting you know, hey, it's time for us to renew, to refile for the state and for our federal filings. Because again, especially for the state, if you're receiving like community funds, if you're receiving anything, within the state, sometimes those grant funders and those community funders will ask you for your state in good standing filings. They want to see, are you in good standing with the state? So if you don't have that, that could be the very thing that can make or break you receiving those funds. So, have a calendar in place that says have those reminders. This is when you need to file every year. In January, you should be filing your tax returns. Doesn't matter what you made. If you made less than 50,000, you still got to file. You still have to file. So that's one, having like a calendar in place, doing internal audits. If you have, your finance committee, or you have if you have an accountant, do internal audits. Those internal audits will, kind of checks and balances, lets you know, hey, we need to, we haven't done this. We need to prepare for this. We've made more than 50,000. We may need to solicit, if you don't have an accountant, solicit an accountant that actually has knowledge on nonprofit tax returns to be able to, get you your tax returns filed each and every year. So you may want to do internal audits, just making sure you are doing your checks and balances internally to make sure that your organization is on the up and up. And last but not least, you may want to obtain someone like myself. I actually do this with my clients each year. I send a notification to my clients because I know, specifically because it's public record, I know if they file their taxes or not. I know if they're in good standing or not with the state. It is public record. That's the great thing about a nonprofit. It's not, I'm not poking in. This is a client, I'm servicing them. So, I look to see, hey, haven't filed, or have you filed, or it's time to file, just that friendly reminder. And it lets them know, okay. And I send that, hey, if you don't do this, these are the risks I'm sharing with them. These are the risks that you take for not filing. So please do not put this off. This should be a priority for you and your team, and making sure that it's done. So you may want to get a nonprofit strategist like myself. Have me on your team. Have me on your team to make sure that you are in compliance, both with the state and federal, and being in compliance with the federal government, which is the IRS. Or having an accountant. If you have an accountant on your board, making sure your accountant is keeping you on your toes about these things, or if you have someone from your legal team, or someone on your board of directors on your team that's a lawyer or part of a legal team, you want to ask them to make sure that they are keeping you on the up and up as it relates to your state and federal filings. This is something that you have to do. It is not negotiable. This is not something that you can say, hey, I don't have to do it. It is absolutely mandatory that you do it. Even if you took a hiatus for whatever reason, you still have to file, because if you want to get back in the game and you want to, restart your organization, now you do not literally have to start from scratch, because you've got a revocation, and your state has been, revoked as well. So you definitely want to make sure that you are doing this each and every year, and that you are putting things in place in order to make sure that that happens. So if you have not done so, this is a good time to take a look at it. And if you want to, be able to, matter of fact, I'm going to post my email address. So that way, if you want to employ me, to check your status and to help you actually file. I am not a tax advisor, but I can assist you if you've made less than there we go. So it has my email address there, Utopian Enterprise Biz. Oh, I'm sorry. I forgot the solutions part. There we go. That's my email address here. So if you would like to contact me, it is Utopian Enterprise Biz Solutions at gmail.com. That is where you can get a hold of me, and we can set up an initial consultation, so that way I can review where you are, let you know what needs to be done. Anything 50,000 or less, I can assist you with. Anything over, I would have to refer you to a tax advisor to be able to help you actually, do your full tax return, because I am not a certified an accountant or CPA at all. So I don't want to do that to you, and don't want to do that to myself. So if, take a look, have we filed? Is this something that we've done? Or if you're not sure where to look or anything like that, like I said, you can reach out to me for an initial consultation, and we can get that process started. I just took care of some clients that kept putting it off, and I let them know, you are at the verge of, having your 501c3 revoked. I've even had some clients where it got revoked in spite of reminders, and now they're scrambling, and we're having to see what we can do to hopefully get that back. So this is something that, you want that reminder. You want to be able to check and see, have someone checking for you to send those reminders, and then you do your due diligence to make sure that you are following through, because that is what your job is, to make sure that you are running an organization. That's what your bylaws are, that you are staying, the governance of your organization is being complied, and your board of directors should be part of that process and reminding you of what needs to be done in order to keep your nonprofit in good standing with the state as well as with the government. So that is what I wanted to share with you today. If you have any additional questions, please feel free to reach out through email, and I can definitely have a conversation with you, set up a consultation so that way we can take a look at where you are personally and answer those questions for you. So I look forward to seeing you at our next live, which will be more information that is going to be extremely important to your organization fulfilling its mission in real time. So see you all at the next live.